Yeah, I'm going to take the next about 30 minutes to give you an introduction to coinIX. coinIX is a very small, however, listed company with a market capitalization of even less than 10 million for the time being. And what we do is we focus on the crypto and blockchain markets, and we do want to give our investors an opportunity to partake in the potential of these new evolving topics. One sec, a brief regards from the legal department, and I personally have founded coinIX back in 2017. However, I've taken over the responsibility as CEO recently. So just briefly to introduce myself, I'm in asset, or I've been in asset management for many years, and then set up the idea of founding an investment vehicle permitting individual investors in the format of a share with an ISIN to partake in the potential of blockchain and crypto. In tandem to doing that, I'm one of the founding members of something that's called the Hanseatic Blockchain Institute. We develop concepts and do studies and do education on blockchain, and I'm a member of the board of the German Blockchain Association, Bundesblock. Before I get you into coinIX, I want to share a tiny hidden fact. This is a screenshot of Amazon, and that is back in 1998. And I have to admit that in 1998, I did not invest in Amazon. In that year, I did my MBA, and a friend of mine told me that he just had bought Amazon shares, and I hadn't heard about the company back then, and asked him, so what it is about. And he told me, well, they're setting up an online bookstore. And I felt like, all right, an online bookstore. And it took me a while to think about it. And interestingly, what I clearly communicated to him is that I said, well, we're using the internet, we are retrieving information from the internet, and we are more and more engaging with back in 25 years ago, engaging with the internet to even do kind of transactions or interactions. And so I said, so technically, I truly believe that it is possible to set up something like a bookstore on the internet. However, I said, I cannot imagine that people will use this because we are used to a habit, which means you go to a bookstore, you open the door, you just walk through the books, you open a book and look into it, and then you go to the cash and take it with you home to have it directly at your place. And we had a discussion back then, and I said, good luck with your Amazon shares. I won't invest because I do not believe that people will use this technology. And to be frank, 1998, Amazon shares went significantly down before it later on picked up again. However, my learning from back then is don't ignore trends just because you personally can't imagine what the potential looks like. And with that in mind, I would like to share a second moment in time with you. Actually, back in 2013, that's 12 years ago, I heard about Bitcoin. And I felt like, okay, that's interesting, and I think I want to touch it. And what I did is I went on eBay because at that time I was not into that business, and there was no German trading venue for cryptocurrencies. And so essentially I bought my first Bitcoin, and this is the eBay confirmation for a quarter of a Bitcoin at a price of 24 euro, e.g. at that time, one Bitcoin was 100 euro. Unfortunately, I bought only a quarter of a Bitcoin. However, this may prove as a confirmation that I started that pretty early. And I have to admit, since then, I'm pretty much sure that the idea, not necessarily of Bitcoin, but the idea of a decentralized data storage that will eventually permit that we digitalize not only the exchange of information, but that we do transactions entirely in a digital network without being required to have any intermediaries, that this has a huge potential. It's possible technically, as 25 years ago, it was possible to set up an online bookstore. However, mass adoption is not yet there. Let me try to explain that a little bit more detail about the evolvement of digitalization. And essentially, there has been something that was called the Web 1.0, which was essentially an information economy. So we were using the internet to look up things, to get information and use it for other purposes. And then essentially starting with the Amazon and alikes, about 1997, 98, more and more platforms developed that would permit not only to see something, to check the weather, or to check the stock prices, but to interact, to set up accounts, to do Facebook, and instead of doing a peer-to-peer communication, instead of sending pictures of your pets and your cat to other people, you would start uploading them on Facebook, for example, for others to be able to see that. However, the web, as we know it by now, is essentially something where we can kind of interact, but the transaction of value is something that does not yet happen if we are not willing to use intermediaries like PayPal and the others. And interestingly, what happened for many industry, for bookstores, for travel agencies in Web 2.0, this was a disaster. They were entirely disrupted because their kind of offering to the clients, which was, you can see a hotel and I give you a price and you can do the booking with me, all this could easily be done online. And there was no need for the traditional travel agents anymore. However, the banking sector, the entire financial system, has hardly been disrupted by the Web 2.0 because their core offerings, which is holding assets, which is transferring assets, and which is investing in other assets, essentially, has not been impacted. So the banking sector introduced things like online banking, which permits that you don't need to go to a printer for your account statement, but you can get it online. However, the core functions of the entire financial services sector have not been disrupted by a new wave of the internet or of the digitalization. And this is going to happen within the next 10 years, I strongly believe. Because by now, with Web 3.0, we have a new technology that not only permits that I interact, but that permit to transact, to transfer something valuable, be it Bitcoin that can be transferred within seconds or at least minutes from one wallet to another wallet, from one individual to another individual in a direct peer-to-peer transaction as easily as sending an email or sending a WhatsApp. And this does not only apply to Bitcoin, because Bitcoin is quite volatile and so on. There are quite a lot of discussions about Bitcoin. However, more or less everything can be transferred and transacted on the blockchain without using intermediaries, and even more interestingly, even without human interference. And this gets us to a kind of philosophical discussion, asking if we like the system as it used to be for the last 150 years at least, that for business transactions, we always have someone to talk to, someone to call up, someone to email, in case that the transactions we want to happen do not happen the way they should happen, or if we are willing, if we are open, and if we start using an entirely digital system that is not running on a single computer, on a single server, and that will fail to operate if someone just takes out the plug, but an entirely digital system that entirely sits on a decentralized infrastructure, which is immutable, which will always work and always act in the way we want it to happen. However, if we lose the access to, for example, our wallet, there's no one to call. There's no possibility to get back the password you have lost. I don't want to go into too much details about that, but this is the core background of why we felt back in 2017, let's set up a company, let's set up an investment vehicle permitting us and our shareholders to be invested in this new trend. What do we do? So we are essentially a Beteiligungsgesellschaft, e.g. we are a vehicle that has little operations, but that's mainly investing the money our shareholders have provided us with. We are not using leverage, so we are investing the equity we have at hand. And we do this in three different pillars. First of all, we do what essentially everybody could do. We buy liquid cryptocurrencies or crypto values. We do direct investments, so we hold some Bitcoin, we hold quite a bunch of Ethereum because we believe that this is pretty interesting. And then we have a portfolio of about close to 20 different cryptocurrencies, which we believe have a significant potential to grow in value. And most of you may be aware that particularly in the months of November 2024, there has been a significant rise in the price of Bitcoin, closing close to 100,000. However, in this period where sometimes Bitcoin was up some 20 or even 30%, there have been other cryptocurrencies that increased in value by significantly more, so-called altcoins. The terminology is that each and every coin that is not Bitcoin is still called altcoin, even though the total market capitalization of these altcoins is pretty close to Bitcoin itself. I'll come to the Bitcoin in a moment. However, so part of our portfolio is liquid cryptocurrencies that we buy on crypto exchanges and that we hold in mostly self-custody, so we do not rely on external custodians. We have developed a system permitting us to do self-custody for the crypto assets we hold. The second thing on the very right is equity investments. So there is a bunch of companies, of startups that is developing technology, that's setting up systems, and these companies are financed in the traditional classic way. They take venture capital, and we have a bunch of about close to 20 companies where we have made small early seed, pre-seed investments, mostly in the range from 100,000 to 300,000 euro per company. Among these, we have a company called Blockpit. They are the market leader in preparing and providing tax assistance for crypto investors. Finexity, a startup here from Hamburg, they do the tokenization thing. We have Natix that pretty much working in the area of decentralized physical infrastructure, e.g. It's about machines that are part of the Web3 system and so on. And I'll come to this in a minute. And then what we do is what stands in the middle. This is token projects. And that's, from my point of view, the most interesting part of our investment portfolio, because more and more young projects do not finance themselves by giving out equity in the classical venture capital way of raising capital, but instead of that, they claim that at some point in time they are going to issue a token, their own token, and that this token will play a significant role in their project. They will be part of the infrastructure of what they're going to build. And in order to attract investors to provide capital for the development of that project, they offer tokens that are not yet existing, which sounds a little bit strange, but we have seen that in the traditional markets as well, that you were able to buy future shares of a company that's not yet even a shareholding company. So it's kind of an option, and this started about 5 years ago and has been more and more a accepted way of providing capital to new blockchain projects. And we have mentioned a few here. We usually do a contract with these companies that is called SAFT agreement, and SAFT stands for Simple Agreement for Future Token. So we do have a pretty much standardized contract that essentially says you provide us with 100,000 US dollars, and you get the promise that at the point in time when we are going to issue our new token, and this token might be listed on an exchange or another venue at some point in time, we promise you to transfer to you, I don't know, 5 million token of our tokens. And we have done this in a bunch of cases. What's mentioned here is the graph, which has been our first extremely successful investment. Where back in 2020, we invested a few hundred thousand euros, and the investment after about 6 months was listed and turned out to have a initial listing value at the initial price when this token came up and was listed on an exchange of 20 million back then. The price has reduced sharply, but sometimes happen in these cases. Nonetheless, even today, the value of what we bought initially in token is still north of 5 million euro. And if you look at our shares, you will see that we just recently published an announcement that we were successful with an investment in a token project called Peak, which is mentioned here. Peak is a very cool project. We invested 150,000 euro back in 2020. It took the team more than 3 years. Nonetheless, the listed or the value of the tokens we got from this initial investment is north of 3 million euro. So we believe that this format and this ability and essentially getting access to this kind of investments requires a network and an expertise in analyzing this kind of projects, might be the most interesting in our portfolio. I briefly mentioned Peak. Here we have a few more details. Investment back in 2022. It was listed in mid of November, and our share, initially 150,000, was at the initial listing 3.75 million euros. All these tokens are always subject to to the requirement not to sell the tokens. So we are obliged, or we were able to sell only 7% of our token, and the rest will be provided to us and can possibly be sold over the next 24 months. Another project we invested quite early in a SAFE agreement where we got token as well, was back in 2021. Kima is a infrastructure provider permitting transactions of tokens between different blockchain, because it's not only one single blockchain, there are a bunch of different blockchains, and users need bridges to bridge the blockchains, and Kima is a very interesting network that's providing services for this particular service. So essentially, what do? We look into potential investment possibilities that are based on blockchain, that are using decentralized technology, that have a high network security, that are solid, that have a scalability. So essentially, we look for projects where we believe that this can really skyrocket. And then, of course, sustainability is an issue we look at. And the good thing is we started with this in 2017. We are a small team. However, we have built up quite a track record and some experience with that. As I mentioned before, our portfolio compiles liquid cryptocurrencies, essentially something that is already tradable or traded on an exchange. Most of the investments we do in this sector are layer 1 blockchain, that's blockchain basic. As I mentioned earlier, Ethereum is something where we strongly believe that there is huge potential for a value increase, and therefore a significant part of our portfolio is actually in Ethereum, which is the second largest cryptocurrency after Bitcoin. For those of you that have a little bit heard about it, Bitcoin is some kind of, from my point of view, kind of the dinosaur of the crypto area, because it's the first, it's the largest. However, it's the least flexible and possibly the first one to die, and therefore we are more and more focusing on these so-called altcoins, amongst them particularly Ethereum. And then, as you can see, for the time being, only 14% of our portfolio is essentially equity, or this kind of SAFTs that are not yet traded. Many of them are related to the financial services sector, some of them related to blockchain infrastructure. We have investments that relate to decentralized finance and other industry cases. The distribution between liquid and non-liquid pretty much depends on the price development of the liquid cryptocurrencies. And as our portfolio has seen a significant price rise over the last 4 weeks, the percentage that is currently allocated to liquid cryptocurrencies is quite large. I don't want to go too much in the details, but there are trends in the blockchain area we believe are there to stay. It's tokenization, e.g. using real-world assets and permitting individuals to invest in them by buying a token that represents them, tracking and tracing all supply chain related issues, and even the Deforestation Act requires to ensure that we are able to track where our deliverables come from. Then infrastructure is a very, very important area. And then the decentralized physical infrastructure, e.g. having machines that are part of the decentralized economy, that can buy their own electricity or whatever, that can interact on on a blockchain is amongst the main trends we see. And then I can share the financials. However, as we are an investment company and Beteiligungsgesellschaft, what counts much more is the inner value, as we call it, so how the net asset value of our portfolio, which usually is a little bit above our share price. And this chart gives you the development of our share price since 1st of January 2023 until recently. And as you can see here, the share price somehow mimics the development of the portfolio, which is good. However, there's always a discount. And if you are interested in looking at our company, liquidity is pretty low and market cap is below 10 million. So please be very, very careful. However, we give access to this interesting area. Just briefly, what we recently did is that we put part of our liquid token into a fund structure, which gives some tax advantages for our investors and makes our liquid portfolio investable for other external investors. And I don't want to go into too much detail. However, we have a broad, diversified portfolio in this fund, which still is part of the portfolio of the KGaA, of the Aktiengesellschaft, where you can buy shares. We have an investment strategy. We even get interest on the coins we have in our portfolio using staking and delegating, which we can discuss in more detail if you like. And that's essentially what I wanted to share with you. We have a small team here in Hamburg, and I think it doesn't make too much sense to go into detail, because only if we realize value, then it shows up in our P&L. With that, we are currently in the process, because we have a few potential investors that would like to buy shares, doing a private placement for new shares. As you can see, we have 3 million shares currently trading at around below 3 euros. So it's about 10 million. And if any of you should be interested in possibly taking part in this private placement for new shares, then please drop me a mail. Thank you.
Thank you very much, Moritz. We have 1 minute left. So I saw that the net asset value jumped up recently. Maybe you could talk about that.
Yes, of course. So it's partly due to the fact that with the Trump effect, all liquid crypto significantly had price going up. And then in addition to that, we had this particular case with Peak, which led to our portfolio increasing by portfolio value by increasing by 3 million kind of overnight, because a position that formerly in our HGB accounts was valued with acquisition cost of 150,000, now got an attributed value of 3.5. And therefore, I mean, this market is volatile, and if the market goes up, then of course the inner value of our share goes up significantly as well.
Yeah. So the time is sadly already up. Thank you very much.
It was a great pleasure. Thank you.